Hello, and welcome to the Bitcoin Butlers podcast. I am Mike Watkins, and with me, as always, is my good friend and business partner, Matt Burke.
Hello.
And each week, we try and bring you an intellectually honest discussion about news and events affecting Bitcoin. If you like our content, please like, subscribe, and share. Well, Matt, we have had a very interesting few days in the world of banking with two very large banks in the US collapsing, one being Signature Bank and the big one being Silicon Valley Bank. So, Matt, you really know a
Mhm.
lot about banking. Of all the people I know, I think you probably know more about banking than just about anyone. So, if you don't mind, walk people through what happened first with Silicon Valley Bank.
Yeah, so the bank started to have issues really at the end of last year. There's a number of things that kind of went into all of this, but the short version of it is that you had rising interest rates over the course of last year, and you had a situation where banks were holding treasury bonds that had a yield that was considerably lower than the going rate. So that by nature makes the face value of those bonds worth less. So towards the end of last year, there was a decline in deposits and they had to be covered. And Silicon Valley Bank had to sell bonds at about a $1.8 billion loss. So they disclosed that last week that they took this loss in the fourth quarter. And I think that started to get people nervous. And what started happening was essentially a bank run where people who had deposits at Silicon Valley Bank moved to get those deposits out of the bank. And that caused the bank to have to sell off more assets at a loss. And they were in the process of looking at how to shore up that shortfall, primarily through selling additional equity, stock in the bank to cover a good portion of that. Well, that didn't really materialize in the way that they had hoped. The demand for that just wasn't quite as high. And before it could even get resolved or someone could step in and buy the bank, on Friday, the FDIC took over as receiver of the bank and basically shut the bank down. And over the weekend, they said that they would be covering all of the deposits, not just up to the $250,000 per account limit that the FDIC sets. So the government essentially said they're going to uh, prevent any depositors from losing their banks. Now, there's a lot of other interesting nuance to how and why this went down. Silicon Valley Bank obviously is a really technology and startup centric bank. This is a Bay Area institution that's been around for many, many years, and tons of startups and venture capitalists and tech companies all relied on SVB as their bank. Um, and so to kind of compound the problem over the past year, we've seen the tech sector take a big hit. We've seen a lot of layoffs in the tech sector. We've seen a somewhat of a contraction of investment in that space. And so as the deposits at the bank were kind of going down because these companies were burning through their cash faster, it kind of set up this whole event that happened last week. It kind of came to a head last week. So, there's a number of institutions and people you could point to in this case. Part of it is the management of the bank decided that they would be going in, they would be buying treasury bonds at historically low interest rates without really considering the fact that if rates were to go up significantly, the value of those investments would go down accordingly. So that was one kind of area of mismanagement. Additionally, you had regulators, primarily the Federal Reserve of San Francisco, that they were really the primary regulators for Silicon Valley Bank and Silvergate, um, and And for whatever reason, it seems like maybe they didn't quite have their eye on the ball in terms of what was happening at these institutions. And so I think there's some, you know, some questions there as to what were they doing. But then also you can look at what did the government do to kind of get the banks into this position. You've got, if you go back, say, 2, 3 years, we had so much stimulus money being dumped into the economy. Basically, the government passed these bills that just printed money and blew it into the economy. And you saw Silicon Valley Bank's deposits go from like 67 million to over 200 million, or almost 200 million. It basically tripled over the course of a few years. And that was in large part due to all of the money that was being put into the economy that's now going into, different companies and institutions where they've got way more money than they ever had. And so now they have to figure out where to put it. And
Mhm.
the idea is that if you can invest in assets that are going to um, yield you something, but then you can loan that money out uh, to your borrowers at a higher rate. You make a spread there, and also if you're not paying out money on deposits, but that money's sitting in something earning a yield, then there's an arbitrage play there. So that's how banks, in a lot of ways, can make money. Well, what happened was by putting all this money into the economy, the gave the bank an incentive to invest in all of these treasuries, which there no one's ever gotten fired for buying U.S. Treasuries,
Mhm. Mhm.
you know,
Sure.
really. But when you have interest rates rising at that rate, it just craters the value of the underlying paper. So um, that's essentially what happened. And then on top of it, now you've got the government coming in and saying that they're going to cover the deposit. So you've got, what I call like a moral hazard issue where the government is giving these institutions an incentive to engage in behavior that's going to cause problems. So
Mhm.
so that's kind of where it landed. And now, I think that, and then Signature Bank, to be honest, I'm not really sure why Signature Bank was shut down so quickly. And I think a lot of
Mhm.
people that know a lot more
Mhm.
about it than me agree. I mean, Barney Frank, who was the co-author of the famous Dodd-Frank uh, legislation that came out of the financial crisis and really put a lot of additional regulation and scrutiny on financial institutions, is on the board of Signature Bank. And he came out and said that, there was no fundamental reason that he could see why this needed to be shut down. And there was somewhat of a run on deposits, but the bank was not insolvent. And given enough time and the ability to liquidate what they needed to, they, in theory, shouldn't have had an issue covering those deposits, yet the FDIC went ahead and took over and shut them down.
All right, Matt. A lot to unpack there. And I thought you brought up a number of really interesting points there. So I want to make sure that I can kind of simplify this enough so that I can understand it. So the first thing that I heard you mention was that this happened in fourth quarter of 2022.
Well, in fourth quarter of 2022, Silicon Valley Bank took a $1.8 billion loss on the sale of some of its bond holdings. And
Right.
they announced that in their Q4 disclosures that came out recently. So it just kind of
Right.
came to light. But yeah, it started in the fourth quarter.
Right. We got the news of the fourth quarter around March, right?
Mhm.
And so when this news that happened actually started last year came out, then people started to freak out a bit, right?
Right. Yep.
And I know that, and so after people saw that, you said that people got spooked a bit. Like they said, "Whoa, we just got this disclosure from the bank. They lost 1.8 billion in the fourth quarter." And people understood what the problem was with them losing it, because that problem was that they had a lot of cash that they had to deploy because their deposits they tripled or quadrupled from like 40 million to said 67 million to about 200 million,
That's right.
right? So like a triple, but that's not 200 million, sorry, 200 billion.
Billion.
So they had an extra 130 billion or so that they had to deploy. And they did what a good bank is supposed to do, right? Which is to buy treasury bonds, right? And at the time they bought these treasury bonds, the bank, the overnight lending rate was like what, 0.25%?
Yeah,
And they were
I think
getting
the
like,
yield on those bonds was like 1.8%.
right. That's my point, is that they were making that was a good interest rate at the time. It was a pretty, I wouldn't say a super aggressive interest rate at the time, but it was a good interest rate at the time. And it was supposed to be kind of a golden rock solid where to put your money, right? I mean,
Sure.
it's considered kind of as good as cash, right?
It is considered a cash-like instrument in a lot
Cash
of
like
ways.
instrument.
It's, you know,
Exactly.
it's very high up on the balance sheet.
Right. So then the Fed started spiking their interest rates, right?
Mhm.
Now, a serious question here. Wouldn't everyone see this coming? And I know people did see this coming, but wouldn't, if you're in the banking world and you have historic low interest rates, and you know the Fed told you what they're going to do. We all know there's that Wall Street has predicted where they're going to get to. And even if they're wrong by a half a point, maybe a point. So everyone knows that when the rates were at basically zero, they were going to go up to at least about 5%.
Right.
Would
So
you
yeah,
agree on that?
yeah, that
But
1.8% turned into 4.8%.
right. But my point is that isn't that something that the Fed should factor into their decision? That if they
Well,
raise rates like this, then they're, well, I'll tell you why they don't factor it in, because nothing happens if there's enough time for the bonds to mature, right?
well, you have this perfect storm. Okay, so what I think the answer to the question you're posing is that the Fed was really in a conundrum because they had a choice. They could either raise
Mhm.
the rates and try to cool
Mhm.
off some of the inflation that we
Mhm.
were seeing, which
Mhm.
started with all of the money printing.
Mhm.
Um, or so they could either raise the rates and cool the inflation, or they could keep the rates, stable or raise them less, but you're going to see a bigger spike in inflation. And when that inflationary spike gets so far out of control, that's a whole nother set of problems that they were trying to avoid. So they were trying to avoid two different problems that had conflicting solutions.
Right. And we people in the Bitcoin world have been talking that the Fed is caught between a rock and a hard place for as long as I can remember. This is not new. I mean, this goes back many, many years, but it's certainly been on the forefront of discussion for the last 24 months. Meaning it's openly discussed, it's frequently discussed. There's no secret to it if you've been paying attention for at any point during the past 2 years. And so then
Sure.
when it happens, people act surprised. I'm just a bit perplexed here in that wouldn't everyone know? Like, if you've been around for one of these cycles before, wouldn't, or even if you haven't, if you just understood the math, wouldn't you know that this was inevitable and that uh, you just had to kind of hope you saw it coming faster than the next guy, which maybe Peter Thiel did in this
Right.
situation.
Although it seems like, he was still moving money out of the bank, last Thursday, the day before it got shut down. So I think that it's one of those things where you could, hypothesize that it would happen, but it's hard to, first of all, human nature doesn't want you to believe that it actually is happening.
That's a weird thing. I
Right.
know, it's so human nature's so weird with that.
But at the same time, I don't, I think to some extent it only happens when it's too late or
Mhm.
almost too late.
Mhm.
At that
Mhm.
point, you get the contagion, and it's just like this snowball effect where it's just you got this kind of last straw that causes everybody to panic and run on the bank, and that's when somebody with authority has to step in and say we're not going to allow this to happen, which is essentially what happened here.
Okay,
Now,
but
yeah,
sorry,
no,
but
go ahead.
why isn't this going to happen in other banks? Like,
Well, I think
why
what
would this be limited to these 2 or 3 banks, depending how you look at it.
Well, I don't know that it will be limited to just these. I think there are other banks that are suffering in this in the same way. But when you compare a bank like Silicon Valley Bank, which I believe was the 16th largest bank in the world at the
In the
time,
world
I mean in the
or
country,
the US?
sorry, in
Okay.
the U.S.
Okay.
Um, you compare its 200 or so billion in assets to a Bank of America that's got 3 trillion in assets. Um, those huge banks, the Banks of America, JP Morgan, Wells Fargo,
Mhm.
Truist, all of these banks are
Mhm.
so enormous and so diversified that they don't face the same pressure that a bank like Silicon Valley Bank does because their deposit base is very concentrated in a specific sector. So it just so happens that they're so heavy in tech and startups, and those spaces were the ones getting hit the hardest in the economy right now. I mean, you've seen pretty much every tech company's had, serious layoffs in the past 6 months. You've seen that there's been a contraction in investment into new companies. VCs are keeping money on the side because they don't know if there's going to be a recession coming. So I think that this bank was uniquely vulnerable based on other things in kind of the macro economy.
Yeah. Um, I don't know. We're gonna have to see how this plays out. I could definitely see a situation where regional banks get hurt by this, and then I talked to a number of people just coincidentally today that are not really into they're not into the world of finance in any way. They're just people I work with. And the talk was, I'm kind of freaked out with what's going on with the banks. And I've never heard these people talk about anything having to do with finances or the economy or anything like that. And I just think that we've seen this before. I think in some ways with the protest in Canada where the Canadian government started seizing people's bank accounts
Hmm.
and then people started using Bitcoin. So we saw like them turning towards Bitcoin at that point. Like people got this idea in their head, like, wait a second, the bank can actually like they can just take my money. Like there's nothing I can do about it. And I think that got in the public consciousness a bit. And then we see it here, and you see it even when like Silicon Valley Bank, which has a lot of, I'm going to say, very affluent depositors,
Sure.
right? I mean, I bet the average individual that banks a Silicon Valley Bank is significantly more wealthy than the average depositor that banks of Bank of America.
Yeah, and I would imagine that a large percentage of those accounts are well above the FDIC limit of 250,000.
Absolutely, exactly where I was going is that
Yeah.
they're just a lot of ways. There's there's a there's a weird thing going on here, and I think it gets people kind of freaked out. And people will not be not getting freaked out nationwide. Like once you start getting people's heads, let me try and be clear with this. Once you start getting people's heads, there could be a problem with the banks.
Or a
Then,
problem with that. Forget they don't care what the reason is. If there's a problem with them accessing their money,
mhm.
that's the problem.
Yes, but I'm saying like people don't really think about when people start to be concerned that their money might not be safe in the bank. Society starts to unravel in some ways.
Sure.
Maybe that's a bit harsh, but people are. I'll put it this way: the banks start to unravel in a lot of ways if people start to lose faith in the banks, and that's what the banks are afraid of. Because is there a bank on the planet that can handle a run on the bank?
I mean,
Maybe,
it depends
not
how
one that
fast
we
the
could
run
name.
happens, right?
Right, right.
But for the most part, the the there's a level of incongruency between the short-term holdings and the long-term or the short-term obligations and the long-term holdings, meaning that you've got
Mhm,
short-term deposits that are demand deposits. Anybody can come in at any time and say, "Give me my money." But because of the nature of fractional reserve banking, where you don't have to actually hold all of that money in a vault with someone's name on it,
mhm.
um, you know, that that money gets invested in things that are not as easy to liquidate as it is for somebody to say, I want my money right now. So you
Hmm.
get into these situations where people come into the bank, and even though on paper the bank may be fully viable and solvent, um, they still don't necessarily have the ability to give you the cash that you need, because that cash is sitting in other instruments.
Hmm. It's a crazy system, and I think it's worth tying in Bitcoin here because this is one of the problems that Bitcoin is there to solve. When they talk about, the meme Bitcoin fixes this, this is definitely one of the things that Bitcoin fixes, because when you hold Bitcoin, particularly if you hold it in cold storage, not if you have it on exchange. If you have your Bitcoin on an exchange, you're basically dealing with a
It's a
bank.
bank, right?
It's a bank. It's not your Bitcoin. So if you have Bitcoin on exchange, you need to get it off an exchange. It's not real Bitcoin. But if you are holding Bitcoin off an exchange in cold storage and you're managing your private keys, then that Bitcoin is yours. You don't have to ask for permission. You don't have to worry about a run on Bitcoin. It's just yours.
Hmm.
And one could argue that it's a much better way to store the fruits of your labors, to store your money, right?
Hmm.
That if I give, let's just say for argument's sake, I have $1 million. And I say, okay, I have $1 million. I just inherited it. I don't know what to do with $1 million. I'm put safest place you can put $1 million in the bank, right? That's part of the culture. And so you go to the bank, and then if you didn't know anything about a bank and you ask the bank some questions, you'd probably think the bank was kind of crazy, right? So it's like, I'm going to give you my $1 million, and how do I get it out? Well, I can only get it out during these hours and these times, and I have to go through these things. And then you said to the bank, well, what are you going to do with this money that I give you? And they say, oh, we're going to find people that want to borrow your money, and we're going to lend it to them, and we're going to make money on the money that you give us. And then the
It's even
person asks,
crazier
well,
than that. It's even
do I
crazier that,
do I get any of that money?
well,
No, you don't get any money. Actually, a lot of the time you get to pay us to hold your money.
you forgot an interesting little twist to that, which is that I give you the $1 million. What are you going to do with the money? Oh, well, we're going to take $1 million and we're going to loan out 9 more million.
Right, right, right.
So
Yeah.
it's not just the money. So you've got that leverage at play where the fractional reserve by its own nature means that the the bank has more money that it hasn't received yet than what it owes to you. So it's an even more precarious situation than what you described, because you've got the ability to make these loans out of thin air.
Hmm. Right. And then you think about what you would get, and it does sound kind of crazy. And then you think about what you get with Bitcoin, which is very simply that you buy a scarce resource that you actually own, that with the power of this incredible computer network and math and cryptography that's just hard for the human mind to understand, you actually own your money.
Mhm.
And that's it. It's yours.
Right. It's if you put your money in a bank, at that point, the bank, you have an IOU from the bank. You don't have money.
Hmm.
And with Bitcoin, that is not the case. The money that you are holding in Bitcoin, um, nobody else can loan it out. Nobody else can put it somewhere where you don't want it to go. It's just absolutely yours, and you have full control over it. And you don't have, if you want to send it to somebody else, you don't have to do it between Monday and Friday from 9 to 4. And you can do it on holidays, and you don't have to have anyone's permission other than your own to use it as a means of exchange.
Okay, so I'm this guy. I've lived in, for the sake of this discussion, it's a guy who lived in the woods, all of a sudden inherits $1 million,
Unfrozen
right?
caveman.
Yeah, something like that, right?
Yeah.
Someone discovers him on a hiking trip. He's lived out in the woods with a small clan for 400 years, right? And somehow discovers that he's owed $1 million, and he goes to a bank and has that whole thing. And so on the one hand, you've got this idea that I'm going to give you this money, this $1 million, and you're not going to put it somewhere safe. You're actually going to lend it to people that I don't know, right? And you're going to do that multiple times, so that even though I give you 1 million, you're actually going to lend out 9 million of my 1 million. And then if I want my money back, I have to come into the bank and fill out a bunch of forms and wait 48 hours and show you identification. And if I follow all the rules, then I can get my money back. And I can only do that at certain times, and it takes maybe an hour or two to do it. And it has to be approved by somebody at the bank. And if it's moving a large amount, it has to be approved outside of the bank, right?
Mm-hmm.
And I have that on the one hand. And on the other hand, I put my money into this digital cyber secure safe, and that money is just mine. And whenever I want it, I go and I send that money to whoever I want from
Mm-hmm.
my phone, essentially.
Sure.
And doesn't matter where they are in the world, doesn't matter what time of day it is. And they know if they receive this money from me, that's good. Because in the first example, that if I do send someone money from my bank to your bank, or I write your check, it still has to clear. It still has to be approved.
Sure. You're talking days before that happens.
Days, right? So, and so one of the things we did see with all this banking stuff going on is we saw a spike in the price of Bitcoin.
Mm-hmm.
Thought that was very interesting.
Yeah, and I think in this case, you saw Bitcoin acting like a risk-off asset. I think that we've seen over the past couple of years that it more or less tracks with equities and the tech sector. I think it's fairly coupled in that sense. There's strong correlation,
Mhm.
but when
Certainly.
things like this happen, or when Canada starts freezing people's bank accounts for political protests, and when war breaks out in Ukraine and people can't get their cash out
Mhm.
of the banks, like
Mhm.
all of those things, there is some level of knowledge within society that this makes Bitcoin more valuable and more worth owning. And so you see that price spike, and we saw it, it's basically up what, 15% or so since last week,
Mhm.
give or
It's been,
take.
it hit, I think it broke through
It
26,
did. It was
and
almost a
then it came
27
back down. Mhm.
at one point. But yeah, it's
Mhm.
it went from basically 19,000 to 25,000 in a matter of a few days.
Well, I think, I don't like to get caught up in too many of the day-to-day moves of it, because I think they're irrelevant, but I do think that some are very relevant. And I do think that uh it showed, it was funny to watch, I thought. You see panic about the banks, and Bitcoin just starts running.
Right.
And what does that tell you? That tells you that people get it. People know what this is. I think there are certainly a lot of people that don't understand it, but I think there are enough people that really understood it. And I actually, when I was watching that price move a bit, I was thinking, wow, huh, people get it.
Sure.
It's pretty cool. What did you think?
No, I thought the same. It was very comforting to me to see that when there are events that kind of help prove the case for Bitcoin, that the market responds appropriately. It makes sense that it went up when that happened, and I think that the amount um, of confidence that people had having their value stored in cash definitely took a hit, and Bitcoin was the beneficiary of that.
Hmm. Yeah, it was a sign to me. It was a sign that, I don't know. I'd like to know if you agree or disagree with me on this. Um, but I viewed it as an admission almost that this was the safe place to be, that Bitcoin was the safe asset, that all this talk about it's speculative and it's, a Ponzi scheme or scam or whatever it is, that when the shit hit the fan, people ran to Bitcoin. And I thought it was amusing. And I also thought that you used a good term, which was comforting. I was like, wow. So people really did get it. They really did understand it.
I
And I
mean,
think that
it is a proof of concept in a way.
I thought, I agree with you. I actually thought that at the time, that same thought, like, huh, it's actually proving itself here. This is a different era. This isn't 2008. And I was wondering, how is Bitcoin going to react to this. And I'll admit, I was a little bit, this may sound terrible, but I was a little disappointed that the Fed stepped in. One, I don't think that was a good decision to begin with. I think that it sets a terrible precedent, and you can't. Sometimes people have to fail. I'm sorry. This
No,
is
I
brought
think
me up before.
I totally agree, and to take that even further, because I think this is actually a really important point of this, is that the Fed is not only restricting free market activity in this case, it's the moral hazard that I mentioned before, which is that by setting the precedent that every bank is going to get their deposits covered, regardless of what stated FDIC limits are. When you see that rule being broken, then now you've just told every other bank that you don't really have to take your risk management as seriously, because if you screw it up like SVB did, they're just going to bail you out. And
Mhm.
so it incentivizes bad behavior, number one. Um, but the other thing that I think is really important in this sense is that you're not I actually lost my train of thought there, but you know, so you incent this bad behavior, and then
You
go ahead.
oh, just it's you know, it, we know what this will lead to, and it's and a 5-year-old would understand this, that if if you had a class full of 5-year-olds and everyone was supposed to, I'm gonna make something weird up here. When you're eating lunch, no one's allowed to go play with anything else in the room till everyone's done eating lunch, till lunchtime's over. And one kid goes off and starts doing what he wants and just does his thing, and no one stops him, then every other kid in that class will think that that is an allowable thing to do now.
Right. You're just
Right? It's just that's human nature.
yeah.
So, and
But
then your argument would be, well, why are we different? Why does that bank have special preferential treatment over my bank?
right. And the answer that they gave to that was really ridiculous. It was something that they considered it, significant to the US economy, which okay, well, a lot of things are significant to the US economy. Doesn't mean that they can't actually behave in a responsible manner. But I remember the other point I was going to make, which is that it seems pretty apparent that the ability for somebody to come in and buy the bank was also halted by the government. There
Hmm.
were
Hmm.
there were I think many large banks that were ready to step in and take over, and what that would have done, which I think would have been from a market standpoint the right move, is that the depositors would have been made whole by that acquisition, but the shareholders of the bank who let their management kind of run wild with how they were managing their risk, they would have taken a hit. And candidly, they probably deserve to take a hit for management doing that. That's what happens when companies make bad decisions. They should lose value. That's how these economic cycles work. And it even goes back to when before interest rates were being raised, the money was so cheap that it gave a lot of businesses the ability to make bad decisions without the consequences of those bad decisions in a normal interest rate environment where you don't have assets being propped up with low interest rates.
I mean, I kind of think of it as it's this crazy game a bit where um, the Federal Reserve tells you to come to them, keep your money with us, it's safe. And then when one of their customers is about to go out of business because they kind of followed the rules, they step in and print a bunch of money to save their customer.
Mhm.
I mean, and I can't imagine that happening in another industry. I was just thinking if there's a place that, let's just say you're a tractor company and you think that people are going to want a certain type of tractor, maybe it's got bigger wheels. And so you invest really heavily in this tractor that's got these bigger wheels, and turns out your customers are really not interested. And then all of a sudden, the government comes in and says, well, listen, you guys made some bad judgment calls here. It turns out you miscalculated, but don't worry about it. It's on this one's on us.
Yeah. How much did you lose? And they take out the
Right.
checkbook.
You're right. No, there'll be no losses here.
Right.
We'll just write you a check. It's like it never happened, and that's kind of crazy, really kind of
Well,
crazy. And
I
I
think
think
that
that
also contributes though to the change in the Bitcoin price, because aside from the kind of flee to safety, I think it's also there is that telegraphing that the only way out of this type of situation is to print money. So I think, there's very little doubt that in some way or another, whether it's directly or indirectly, there's going to be monetary inflation as a result of this happening.
yeah, and then you have I agree, and then you also have the situation where they may have stepped in too early at Signature Bank, and there's
Mhm.
a thought that that is an anti-crypto play there by the government.
Well, I think there was some level of them saying, well, we see this as riskier because of its crypto exposure. And I think that there was
But
some
isn't that a judgment call?
absolutely, but I think there was there was some opportunism at play there where
Mhm.
people saw it as a point in time where they could use that as an excuse and make a move, and maybe that's what happened. I don't want to speculate. I don't know the details of how
No.
they came to that decision. Um, but I think, you a lot of this is being all tied together with, I think when you see Signature and Silicon Valley, there are kind of these weird tie-ins with FTX and Silvergate and, and what of a bank. So, there is speculation that maybe that is part
I
of it,
mean,
but
they were 3 of
I
the
don't know.
top banks that dealt with crypto. Weren't they the big 3 banks in crypto?
Three of the big ones. Yeah, I don't know. I know
3 of
Silvergate
the
obviously
biggest.
was huge. Yeah.
Yeah, I'm just saying these were significant banks in the crypto community. Now, I don't know what relationships different people have, um, when it's just Bitcoin, not crypto,
Mm.
but, uh, it is curious. It's certainly a curious run out of events.
Yeah. So, what I'm trying to figure out is really what happens next. Do things get worse or better from here? I think we're clearly seeing some bank issues in Europe.
Mhm.
You know, uh, Credit Suisse is having issues, and what's the bank? Is it BNP Paribas?
Yeah,
Yeah, that's
that's the biggest bank in France.
is having some
Mhm,
issues. So
mhm,
these are not to be taken lightly. I think that you got to see what happens there, but there's a lot of um, uncertainty right now in those financial
mhm,
institutions,
mhm. Well, I
more than we've
saw
seen since 2008.
this is an event, and this event is not finished. We know that. And I saw something before we started tonight that Credit Suisse
Hmm.
is borrowing 50 billion from their central bank. So they're
Yeah,
printing 50 billion. So we're going to start to see this. Most likely thing is they're going to print money to shore up their banks because what are the choices they have?
there's not
What
really
am I
any
getting
other
wrong
choice.
there?
I mean, the only way that they can get out of this is to either print money or raise taxes or
Not enough
find some
money.
other way. It's like you're not going to
Well,
tax
but
your
the
way out of
easiest
it.
thing for them is to just raise money. Is just to
Right.
print money. I mean, they just print the
Absolutely.
money and they just backstop it. But this really is I mean, it really is a Ponzi scheme in a lot of ways.
Yeah.
And what I'm curious about is the evolution of people's mindset. And what I mean by that is 2008 had an effect on people. I was I remember 2008. I was, my business was certainly impacted by it because I'm in the mortgage world, and there were just an enormous number of foreclosures. It was just chaos. No new loans were going out, and loans are being
Right.
foreclosed at a crazy rate. And there were when you had foreclosure day, there would be protesters out on the streets of foreclosure day. Foreclosure days were foreclosure days, for people that don't know, in non-judicial states, happen on the front steps of the courthouse in the county where the property is situated. And there's an auction that takes place for the public to see, and there would be protesters month after month around the country, the Occupy Wall Street protesters
Hmm.
protesting this, and it got into the public consciousness. And then it just kind of went away, and now it's come back. But when it's come back this time, there's an alternative,
Right.
and that alternative is Bitcoin. I mean, Bitcoin came out right after this, right? It was sort of a response to this in a lot of ways,
Sure.
if not all the ways. So I don't know what happens when this happens in a 13-year life or 13-year cycle, right? Where people were around for the first one and the second one. Like, this
Hmm.
wasn't something that happened once in a generation, that people have experienced this. And that people were really angry in 2008. I mean, what they call it, the great financial crisis. I mean, a
Right.
lot of people got really, really hurt, really hurt.
Sure.
And now 13 years later, what we're going through is all over again. This is someone's not doing something right here, and the people are going to be justifiably angry. And I don't know. I don't know. I don't know how. I'll be honest. I don't know how information is really disseminated these days, because I think a lot of it's decentralized. It's not 3 nightly newscasts and certain number of uh, national newspapers.
Hmm.
And I don't know who's getting their information and where they're getting it from. I really don't know the breakdown of that, but I do know that uh, this will certainly be part of the discussion in certain echo chambers, if that's a good way to put it, right? And
Yeah.
how does that change people's mindset now that they're seeing it in 2 ways? The first of those 2 ways is that this is twice in 13 years. Like, what's going on here? And the second being, like, we have an alternative now.
Right. Well, thankfully, we're not at 2008 yet. Um, and, it remains to be seen what could happen. I still think that, like, for example, if Silicon Valley Bank could get acquired by another bank and come out of this, those concerns could ease, and it might, help prevent the contagion and the, a more widespread issue. I don't know if that's too optimistic or realistic or what, um, but I think that the second point, which is that now there's an alternative, it makes the prospect of it, at least for me, less scary than it was in 2008, when we really didn't know if the complete global economy was going to melt down, and all the banks and all the institutions were going to basically
Mhm,
go under. I mean,
mhm,
that's kind of how it was being billed at the time it happened.
mhm,
But at that point, there wasn't, there were gold did really well in that moment,
mhm,
as a flight to
mhm,
safety.
mhm.
Gold
Very,
did
very
well
well.
this week.
Mhm,
Uh, but now you've got, a new asset that is, you know, digitally pure, far superior to gold in many ways. And so I think that if people know that they have the ability to flee to something that's that secure and that reliable, then it'll be interesting to see how that plays out if things get worse.
mhm. Yeah, and here's another thing to keep in mind is that if you wanna buy gold digitally,
Mhm.
you're not buying real gold. You're
It's
buying paper
paper.
gold. You're buying basically paper gold, and that's not real. And that's the only way to really do it like that. So when people are trading gold, they're not really trading gold. You don't really own gold from that. So if there was a problem, you're still calling up Schwab to say, I need to cash out. I need
Yeah,
my
I mean, unless you're
money.
buying bars
So,
or bars and coins
mhm,
and Krugerrands and keeping them in your own vault,
mhm.
you're not
Right.
typically owning gold.
And that's my point, is that with Bitcoin, you're really owning it.
Mhm.
And I did want to clarify a point that I made before. My point wasn't that what we're seeing right now is equivalent to 2008, because obviously they did everything they could to try and make sure we didn't go there. What I'm talking about is the fact that regular people are noticing that the government or someone stepping in to bail. Here's what regular people are hearing: the bank was bailed out, and they don't like that because everyone thinks it's unfair. And that has made the news, and you're hearing these other
Right.
banks, and then we still don't know how it plays out in Europe. And this is far from over as far as I'm concerned. I think that this was we'll see. I'm going on record. I think this was a short-term patch for now. How long that short-term patch will be, I don't know. They never underestimate their ability to kick the can down the road.
Right.
So,
I
but
I agree with that.
we'll see. Mhm. I just think things in Europe are going to play out. It's very, very difficult to see where this will play out. Although, if we're going to be honest about this, people in the Bitcoin world have been predicting this with charts and graphs and data
Yeah,
for
for
years.
years.
So, and the argument was, and I'm curious, was that it's just, I'm about to say, math.
Yeah,
People just did the math. And
right.
you just do the math, and it's like, okay, the math doesn't work. It just eventually doesn't work. And if you understand, you dig a little deeper how the systems are built and what's going on with them and all this kind of stuff, and you just realize like banks are not a safe place to put your money. And I know we were talking about a clip that you watched where they were setting the inflation rate at 2%. What was that clip?
Yeah, it was Jerome Powell talking about it. Actually, I think I can probably pull it up here if you want to see it. But he was basically talking about how the 2% inflation is the norm because that's what everyone's agreed it should be. So basically, saying
The people didn't agree.
no,
The
no, no.
people didn't agree to said 2% of
Here,
their money being stolen each year.
yeah, here. Let me see. Give me 1 second.
For the general public, for those working families of people, why 2%? Why is getting it to 2% so important?
So that has become the globally agreed, essentially all major central banks target 2% inflation in one form or another.
How does that help my Nevada families? How does that help people in Nevada?
I'll tell you how it does. And it's I guess it's obviously not, it's not obvious how that is, but 2% inflation, to have people believe that inflation is going to go back to 2% really anchors inflation there, because the evidence and the modern belief is that people's expectations about inflation actually have an effect on inflation. If you expect inflation to go up 5%, then it will. If everyone kind of expects that, because that's what businesses and households will be expecting, and it'll kind of happen because they expect it. So having a 2% inflation goal, which we had for many years.
Wow.
Yeah.
That was amazing. I had not seen that clip before. I knew that clip existed, and I had heard a bit of it, but I'd not seen it from beginning to end. That was really extraordinary.
Yeah, it's pretty unbelievable that, I mean, talk about saying the quiet part out loud. I mean, they're just he said in a very eloquent way that it is arbitrary, made up, and it only happens because we say that's how it should happen.
Mm-hmm. It reminds me of it could be like a Saturday Night Live skit from the 80s.
Yeah, or a
People
Christopher
make
Guest
fun of
movie,
that.
right?
Right. Right. Like the argument there was absurd. And really, I don't think people really understand that. And that could become part of the public consciousness once again, is that they're basically saying that they get to take 2% of your money each year. The inflation is them printing money, is them devaluing your money.
Right.
So they're taking 2% of your money away each year.
Well,
After
they
about
tell you they're taking 2% per year, and that's what
Mhm.
everybody agrees that it is because that's what they say that it is. But then when you look at something other than just a arbitrary cherry pick basket of goods, that number is, at least right now, way more than 2%.
way more than 2%. Right. That's their number. It's like they agree you agree to let them take 2% of your money each year or let them
Right.
steal it. And they say, "All right, that's not quite good enough. We really need more like 7 to 8% each year compounding."
That's how it's happened the past few
That's
years. So
how it has happened until something came along. And I saw, kind of shifting gears just a bit, there were only 1.7 million Bitcoin to be mined.
yeah.
Isn't that cool? I don't think people, I mean, when I say I don't know if people are really thinking about that, we saw a flight to safety, and if these banks weren't bailed out, who knows what kind of flight to safety you're going to see? And if there's a meltdown in Europe, you could see a really big flight to safety. We don't know.
Well, I think maybe a way to put that in perspective is that, and I wish I knew the number, what percent of gold that exists on the planet is not out of the ground?
I think gold is fairly close to infinite.
Right. So
I mean,
what
nothing's infinite, but I'm just saying I think it's just a function of labor.
it's a
for
function of
gold.
labor. With Bitcoin, there's only like 8 point something percent of it yet to be mined.
Mhm.
And so when you think of it in those terms, I think that really also, and then couple that with the fact that it's going to take until, 117 years or so for that to actually happen. I think that gives you maybe a different perspective on how scarce it really is.
Mhm. Well, it's, you know what it is? Part of it is the power of the double, right? And so
Mhm.
what you're really, except in Bitcoin, you don't have a doubling, you have a halving. You have a reverse double. And we have had, there have been 3 halvings so far, right?
Mhm.
And by the time you get to about, and I'm doing this not because I know what coins are coming up, but by the time I know in math that by the time you get to your 8th double, or in this case, your 8th halving,
Mhm.
you start dealing with weird numbers. So when you get to your 8th double, you start dealing with very high numbers. You start to really start dealing with some high numbers. And when you get to your 8th halving, you're dealing with very, very small numbers, which means that essentially within 32 years after its launch, the new coins coming out are essentially, they're close to zero.
Right.
For all intents and purposes. They're few and far between. And you don't have to get to that 8th multiple. I think that when we get to our 6th halving, it's going to be
Right.
very significant.
Yeah, because at that point, the amount that's coming onto the market is so small that, number one, it would imply that the value has to be much greater in order for, assuming things are still running the way that they're running and growing, if they continue to grow as they are. I mean, we're still seeing all-time high hash rates. At one point I checked today, it was 312 was, where we're sitting. It's like, how much more powerful could it get and how much more valuable would it be at that point?
Yeah, it's something that I think I'm gonna maybe take some time to think through, which is this idea of, I think it was Einstein who said that the 8th wonder of the world was compounding interest, right?
Yeah, I've heard, I don't know who said it, but yes.
A lot of people have said it, but I think Einstein was certainly one of them. But there's this whole thing about the power of compounding interest. Is that famous story where the king that was brought chess was asked what the person wanted, and the person said he wanted 1 grain of wheat for doubling for every square on the chessboard. And by the time they got to like the 10th square, I think the king had him killed. Something like that,
Sounds
maybe a
right.
little higher than the 10th. But it's that power of compounding interest. And Bitcoin is something unique that I can't really think I've ever heard someone discussing it before, which is the power of having interest.
Mhm.
Is that you're owning this thing as a smaller and smaller amount can possibly come out, which makes essentially what you have, even though it's technically not more scarce, the lack of new supply coming out does make it more of a rarity,
Right.
right?
It's just a
an old
simple
baseball card.
supply and
So,
demand.
but that maybe that's this idea that it's like, you hold Bitcoin to get through. Like, I'm going to buy Bitcoin, and my plan is to get through 3 halvings. That's my goal. Or in the terms of investing, it'd be like 3 doubles.
Mhm.
And it may be, I don't know what happens to the price of the coin, because there are a number of macroeconomic events that are going to affect that. But I think there's maybe maybe not, correct me if I'm wrong, but it's sort of this doubling in reverse. I've never
No,
really thought about that way before.
no, absolutely. I think that's correct. And I think it just, most people aren't, they're not thinking about the price of it in relation to the scarcity of it. They're thinking, most people who are buying Bitcoin right now are honestly not just saying, I'm going to buy it, put it in cold storage, and forget about it for 3 halvings or whatever. I think that that's just not a way that most people think about it. But I've said all along, I don't see this as, talk to me in 5 years if you want to talk
Mhm.
about, price fluctuations. I'm not really
Mhm.
concerned about the volatility in the price because we're just still so early with it.
Mhm. Well, I do think, though, that it will be interesting to see what happens for a number of reasons at that halving, which is coming up. It'll be here before we know it.
It's
In about
basically
a
a
year.
year. Yeah.
Yeah, and it's going to be some really interesting things, and depending on what the geopolitical climate and banking climate looks like over the next 12 months, could have some very interesting implications for Bitcoin's adoption. I know price will come with it, but Bitcoin's adoption. I know that when we have these events, adoption goes up. Yeah, the price goes up,
Yep.
but we see the number of new wallets coming online. It increases adoption.
Well, it's
People
again,
who are on the fence go over the fence.
people like to see proofs of concept, right? They want to
Mhm.
see that, okay, this is actually doing what it was designed to do. And that's when you get people to buy into it.
One of the things I thought I want to add in here is when I watched the price go up as I was reading the news of the banks collapsing, and I thought, when people see that the price of Bitcoin goes up when the banks are collapsing, that it's kind of a simpleton way of thinking, where it's like, oh, all these things are going down, and then someone says, well, that one's going up, and then immediately people will think, oh, I want that one. Like, that seems like the right answer. It's kind of weirdly wired into you. So I don't know. And I don't know how many people are paying attention, because it happened on the weekend too.
That's true too. But it'll be interesting to see what happens over the next several weeks. So
Yeah, I don't think we're done with this. I don't think this is the last of this story. I just don't. I think they would like for this to be the last of the story and calm some people down. And that may be in the US, but I think this is more of a worldwide problem than just a US problem.
well, it's also,
And
it's
that
not,
may be better or worse for the US. I don't know.
it is a multi-dimensional problem as well. It's not
For
just
sure.
a banking problem. And so there's, if you look at what happened leading up to 2008, there were multiple pieces of that puzzle that kind of all came together to cause the huge problem. And I think at this point we're seeing maybe what could be, a few pieces of that puzzle. They're very different though. I mean,
Mhm.
there's different political climate, different geopolitical events. There's, war in Eastern Europe. There, all of this stuff that's like, you're still on the tail of the pandemic and everything that goes along with that. Like, you've got all of these weird external factors that we don't know how they're all going to kind of mesh together
Mhm.
to move us in which direction. So I think
Mhm.
it's interesting times. As
Mhm.
you
It's
might say.
also, I think, a worthy analogy here is complex systems, nested in complex systems, nested in complex systems.
Right.
This is just interesting times. Certainly interesting times.
Yep.
On lots of levels.
All right. Well, for those of you who have recently adopted Bitcoin because of bank runs, we're happy to help you figure out how to buy it, store it, set up an inheritance plan around your Bitcoin, run your own node. You can reach us at btcbutlers.com. Info@btcbutlers is our email. On Twitter, btcbutlers. Like, comment, subscribe. If you have any questions, please reach out. We would love to hear from you, and we'll see you next time.
Thank you, Matt.
Bye.